Hey traders, welcome back to the channel. So one of the more popular questions I get is, how much time, Mike, do you devote to your trading, every day or every week? And that's a very subjective thing because it's really, how do you define trading? Is it the actual trading itself, or is it all the prep work and the management and just the total time I devote to the profession of my trading? And it's obviously a big difference in numbers. It depends how you define trading. However, one of the things I do realize is I spend a lot of time when I'm not actually clicking the button on auditing my journals, auditing my work. How can I improve? I also manage overseas accounts where I actually audit their trade journals, and of course, a select member of the Desire to Trade community. And one of the things I'm always coming across is how actually traders measure their success. And there's a lot of variation, and for the most part, if they're doing well, they'll see it in the numbers. But there's three metrics where I'm really not crazy about, and I kind of suggest and have recommended traders stop using. And one of them, I even told my managed account they can no longer track. All right, so before we talk about the three metrics, which I suggest maybe we stop really using, and I'm going to give you some other suggestions to replace that. Do me a favor, I haven't asked you in a while, click the subscribe button and click the like button. It really makes the channel go further and allows us to provide, the free content for you and the YouTube community. So the question I always ask myself when it comes to trading metrics and monitoring trade journal statistics is this information going to help me improve my game and help me get to where I want to go? And I think for these three metrics that I see a lot in trade journal audits and trade journals, well, I don't think they really add too much value. Let's take a look at the first one. All right, let's get the cat out of the bag. Number one, win-loss. All right, it's one of the metrics that everyone calculates, even the newbies traders just starting in their first week. All right, I'm glad that you're tracking, in journals, and I'm glad you're doing what you got to do. But I really asked myself after several years, and I tracked win-loss as well, what is this really telling me? I mean, does a high win rate mean I'm doing better? Because a lot of times, and I did the analysis, that I couldn't find any correlation between an increased win rate and success. All right. So in fact, I found the win rate when it started to creep higher, I was either taking profits earlier or something like that. And it really wasn't having an overall effect on my goals or as my growth as a trader. So about a year and a half ago, I stopped monitoring win-loss. And I have to tell you, it is like a refrigerator coming off my back. All right. And I couldn't tell you that a few years ago. I mean, I've tracked it for, I can't tell you, more than probably 15, 17 years. All right. But I let go of it. And not only does this metric come off my plate and I really don't care about it anymore, but it allows me to focus and breathe more. And when I'm in a trade, it doesn't kind of let me sort of get that win. I know I want that W, keep that win rate going. I don't worry about it anymore. And it allows me to focus on really executing the trade as it was designed to be. Don't you ever have that where, you have a win and maybe it's kind of pulling back and you just take the few points or whatever it is, the 10 pips, even though it wasn't a full win, but, you kind of get that W in the column. I don't have to worry about it anymore. And quite honestly, it's freed up some mental capital, which there's really not much up there anymore, but it has allowed me to really focus on my job as a trader. All right, next, the number of points or number of pips as a sole measurement of success of the trade. I see a lot where it says, okay, I made 18 pips, 18 pips, 18 pips, winner, 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 right? I mean, I guess that's good. What is it telling me? All right, what is the optimization of that trade or the strategy? Is it 23 pips? Well, to me, then you're leaving either money on the table, and not individual trades, anything can happen, but over a series of trades. My thinking is, how about you measure the optimization rate? All right. If the average win on this is, say, a standard deviation or whatever the case may be, well, if it's 2-to-1 R or 1-to-1 R, whatever how you guys measure this stuff, all right, that's fine. Well, then that doesn't mean that every target is 18 pips, all right? Maybe it's 12 sometimes, maybe it's 24. So when you measure things specifically on the number of pips as your success, I think you're really not measuring what really should be done. What should be done, I think, is measuring optimization. Think about that. I know it's a little controversial, particularly the win-loss one, but I want you to think about it and say, yeah, you know what? Maybe that's true. What if you have a goal where it's just, I want to take 2 pips? Maybe that's fine. All right. Maybe that is your actual target. All right. But is that the optimal place where the trade could have played out, at least over a series of trades. I think if you realize that your optimization point and the amount you're taking sort of stiff targets, regardless of market conditions, is different, maybe we need to look at that and say, maybe that's money I'm leaving on the table. All right, another one I'm not crazy about. Measuring the results at the end of the day. Did I have a winning day or did I have a losing day? Now, it's not that bad. I kind of like to see sort of consistency. But when you're measuring it like a result, saying, okay, this is a winning day. Well, was it? Did I follow my plan with compliance? Did I crush it? Did I get lucky? And that was sort of a winning day. Now, overall, over a series of days, it probably is going to show good progress or maybe some issues. But I don't know, maybe it was just the markets weren't good that week. Maybe there's a lot of tweets that screwed you over. Well, maybe you shouldn't be penalized for that. All right. Now, if it's consistent that things are dropping off, okay, well, maybe we need to address it. But I just think this whole thing about having a winning day really sort of gives incentive, especially towards the end. Maybe you're down a little to throw a little cheap trade. Come on, we've all done that. Throw a little cheap trade just to get the W, for the day. I'm not crazy about that. I don't think it really tells you anything. And in fact, it may tell you you're hiding something that may be truly there that you need to address. All right, and the next one, I'll throw a fourth one in there too, is, again, I know we'll track this too, but profitable days in a month. A part of me when I'm looking at this is saying, who cares? Right? I mean, if you traded your plan correctly and you did everything you can and you optimize your performance, I mean, if you had 20 winning days in a month and then the next month you only had 18, I don't know. Does it really matter? I mean, I'd rather see you have 15 winning trade days, but you crushed it and you did everything possible. You pushed size when you needed to. You did everything that a trader's job description really is supposed to be. So while I kind of like the bigger sample size of how many profitable days in a month, I don't know what it really is telling me in regards to the quality of how you are as a trader. All right, so enough of the hate comments. All right, let's give me some suggestions, Mike, right? What can I do to replace those or at least complement them, okay? I know Rome wasn't built in a day, and I don't want you to start scratching them all. I know it's uncomfortable, but the first one I want you to think about, everyone should be measuring and monitoring this, your profit factor. All right, profit factor really is how you're doing, right? It's how much money you're making on average on a trade or with a particular strategy. My personal opinion is you really can't pay the rent with win-loss, but you can pay the rent with profit factor, all right? So what I want you to do is take that into consideration, and even if you don't want to get rid of win-loss, that's fine. Add profit factor. It really will show you how the optimization part of your strategy works and say, okay, I can go to a profit factor and be steady at, say, 1.30 or 1.50. That's fine. And be honest with you, when I see an audit and I see 2.5, 2.7, where the original will say 1.3% profit factor, as a risk manager, I start to get nervous. Maybe you're pushing it. Maybe the market conditions are not going to be sustainable with that strategy. I want to do a deeper dive. But profit factor brings to light all these issues, and I could really read a card really, really well just by looking at profit factor. Please, please, please consider it. It's on most of your trading platforms, so it shouldn't be much of an adjustment. All right, so the next one I want you to start thinking about including in your metrics is portfolio delta. Now, this really probably would only apply if you have multiple positions and you're somewhat of a swing trader. All right, if you're scalping and in and out in 5 minutes and you're flat at the end of the day, it's probably not that necessary. But when you have multiple positions and they're all leaning long on, say, like a USD base pair, or you have 5 open positions, and even though the strategies are all valid, but they're all long, like big tech or mag 7, we got a problem. Okay, we're basically we have like an A plus setup with a lot of money on the table, and we're not factoring in the fact that it's just we're putting ourselves either at a risk of ruin or having a really, really, really bad day, and ultimately maybe a bad week or a bad month. So think about your portfolio delta, especially if you have multiple positions on and in the same direction. Next, I want you to think about measuring the quality of your actual trade. And I want to break it down to 4 components, right? Identifying the setup, the entry, trade management, risk management, and the exit management. Measuring quality is really, really important to determine how you are getting better and are you reducing the mistakes that all traders make in their development. All right. I had an uncle once who when I was a kid. They'd all get together on a Saturday night when I was like 10 years old. And about 9:30, he owned a deli sub sandwich restaurant. And he would go to the phone and call up the manager there and say, "How many rolls do you have left?" And we always thought that was kind of weird, right? But he could tell just by that one metric how he did that day. If he ordered so many rolls to make his sandwiches and he only had so many left, he can just tell everything about the quality of the production that day. All right. So what I want you to do here is kind of reduce these down to the ridiculous, but having a quality metric is so important, particularly in your development. You want to see those metrics get better and better. And we do that by learning from our mistakes. All right, next. I want you to start thinking about measuring the percentage of capital you use on an average day. All right. Now, there's going to be a lot of things that vary. The opportunities that come in front of you in the trading day could be your mindset. Maybe you're not feeling well and you want a lower size. That's fine. I mean, that's encouraged. But on average, there should be a certain percentage over time that you're using. And when you're doing really well, we want to see you improve and increase that percentage. Now, your account size may be increasing as well. And what I see a lot is pay me a person who starts out with 20,000, starts moving to 30, 35, 40, but their size is staying the same. All right. That's going to lower their percent of buying power used. And that's something that I'm going to look at and say, hey, we should be increasing that. Maybe it's just, psychologically, they don't have the muscle or they're a little nervous about increasing size. It's very normal, but at least this will identify it. And it will also identify if you're using too much capital each time you trade, especially in markets maybe on a Fed decision day or a crazy day where vol's expected to be a little nuts. All right. We want to lower that. But measuring and monitor that will determine what you're doing. And are you increasing gradually when you're winning? And should you be decreasing that buyer power reduction when you're having a rough go or in drawdown? All right, next. I know the guys and girls at Desire Trade know this one very well because I preach it, is measuring phantom trades. And what those trades are simply trades that were valid that you didn't take. Could be you didn't want to take them. Maybe there was fear. Maybe you're just out for the day, or you took the day off, or you had to take the kids to school and you missed it. That's okay. But particularly for traders who don't have a lot of occurrences, we want to make really good trading decisions based on a series of trades. And for scalpers, that's not a problem. You could bang that out in a week or two. But for swing traders, or maybe who use daily candles, who only come up with maybe 7 trades a month or things like that, it's really tough to come up with valid analytics because the sample size isn't valid. But what you can do, add in the phantom trades, the trades that you didn't take for whatever reason. Put them into the mix. They're valid trades. You just didn't take them. And really what I see, and this is very common, I do this all the time, unfortunately, is I'll just look at my trade journal. How did I measure the trades in my journal, the ones that I've taken? But the ones that you didn't take are purely just as valid. Now, they may not qualify for the quality metrics. How did I do on exit? How did I do on entry? Doesn't matter. You didn't take it. But it will show and validate the quality of a setup more accurately with more, shall we say, 2 standard deviations, which is sort of like a green light when it comes to moving forward with a strategy. So think about that, particularly for swing traders who may be using daily charts and only have maybe 5, 10 occurrences, maybe 15 a month, and you really want a bigger sample size to make quality decisions. All right, lastly, I'm going to kind of cave in and give you one here, right? Go back to that profitable days in a month. All right, look, if you want to do that, that's fine. But how about we make a little compromise? Do the profitable days metric in a month, but only do it on ones where you didn't sort of cheat. All right. That last trade where you needed maybe 4 S&P futures points or, 8 more pips and you took a trade and got 10 and you got the W and you got the green. All right. No. Okay. How about we do that? So you can do, and I suggest that profitable days in a month, but just make sure it's legitimate because really you're only hurting yourself. All right, so I hope you got something out of this. And again, I tried a little fun with some of these, metrics, particularly win-loss. I know most of you aren't going to listen to me. That's fine. It's all good. All right, but I hope some of the suggestions I had, either you can add to your arsenal or replace the ones that we talked about earlier. Let me know what you think. Put your comments there. Let me know. No, I'm going to track win-loss. I don't care. All right. It was tough for me. It was like giving up sort of sugar in my coffee. All right. But once I stopped doing it, actually, you know what? I got used to it. All right. I know it's tough. Try it for a day. Try it for a week. All right, see what you think. Let me know. All right, you could even post it in another video if you like. All right, I want to say it's like that sort of atomic habits. That first day or two, it sucks, but then you kind of get used to it. And if you have a valid argument to say why win-loss is so good, pays the rent, all right, go ahead, keep it. All right, it's not the worst thing in the world. All right, that's the beauty of trading. We can all do this different ways and still come out with the best outcomes. The most important thing, as always, quality setups, executing with edge, and you'll be just fine. All right, thanks again. Hope you enjoyed this one, and we'll see you next time.